Sellers who list their properties April 13, the 19th of May earn $4,800 more, sell their home 9 days faster, and reduce competition by an average of 13.2%. Austin, Texas. In a challenging real estate market, timing can make all the difference. And this year, the optimal time for sellers to find the ideal balance between market conditions is April 13th, April 19th. If 2025 follows the seasonal trends of previous years, sellers who put their home on the market during this week could receive an average of $27,000 more for the sale of their home, sell faster, and see more buyers in the market compared to the beginning of the year. Spring is typically a good time to list your home. And at a time when policy changes and economic turning points create questions and uncertainty, it can be helpful to focus on what we do know. As mortgage rates continue to be higher than many buyers and sellers prefer, the market is starting to show encouraging signs. During the week of April 13th, sellers can expect favorable conditions including inventory, demand, favorable competition, and market momentum. The median home listing price this week is 1.1% higher than the average week of the year and 6.7% higher year to date. Thanks to above-average demand, homes typically sell faster this week. Historically, homes for active sale this week have sold about 9 days faster than the average week. The number of buyers viewing a listing can determine how many offers a home receives and how quickly it sells. The more buyers look at a home, the better for the seller. And in most years, buyers start earlier than sellers. Mortgage rates have remained above 6% for more than 2 years, and in response, many buyers have stayed out of the market. A typical inventory trend means there are 13.2% fewer sellers on the market this week compared to the average week throughout the year. Seller activity tends to increase from the beginning of the year until around November. Key factors for the housing market in 2025. Heading into the 2025 selling season, conditions are looking a bit rosier with more options for sale, which could stimulate buyer demand in both well-supplied markets and in-demand markets with low inventory levels. Mortgage rates are expected to move into the mid to low 6% range by year-end. We expect mortgage rates to edge higher this year as inflation approaches the 2% target. Prices tend to peak later, and so does competition. Sellers should keep in mind that peak prices later in the season also come with more competition from other sellers for a similarly sized buyer pool. While inflation has eased in recent months, the path forward is uncertain given the current administration's various economic priorities and proposals. Specifically, tariffs could make it much more expensive to build homes in the U.S. and could hurt the housing market both by pushing up inflation, which keeps mortgage rates high, and by curbing home building activity. It's too early to say how these proposals will play out, and it's important to recognize that individual perspectives can influence whether policies generate more or less enthusiasm. But buyers and sellers may be hesitant to make big moves until the future is a little clearer. An average over the years yielded the typical seasonal trend for each metric. Percentile levels for each week were calculated across each metric: prices, listings, days on market, etc. Then averaged together across metrics to determine the best time to list score for each week. Thanks for watching. Please visit our site for additional videos and articles, www.nadlinforum.com.